What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Charlie and a new guest with us this week in the form of Emma Partis, our colleague over on the accounting titles. Welcome, Emma. Thanks for joining us.
Yeah, thank you very much. Glad to be here.
Glad to have you in the studio. And this week we thought we'd bring you in because a lot of the conversation that's been going on has been around tax reform, CGT changes, payday super changes. So we thought, well, who better to come and chat to us than someone who's actually been writing about this from a tax point of view over on our sister titles, Accounting Daily, Accountants Daily and Accounting Times. So welcome and thank you for letting us bully you into coming onto the podcast. Charlie, how's your week been?
It's been good. It's been jam-packed as usual. We've had, last week was obviously result-centric, but this week we've had a whole mix of things, which is always nice.
Yeah.
Some well-rounded, we're doing all sorts of categories. So results in the mix and also a lot of housing stuff as well, mortgage demand. So yeah, can't wait to pack through it all.
Yeah, results season's always super exciting for us because we get to have a good old snoop at what everyone's loan books are doing, whether they're growing, whether they're shrinking, what their broker flows are doing. So yeah, we've got some more this week. But as I mentioned, the other big thing that I think a lot of people have been talking about this week has been around tax reform. Now, we have heard this so many times in the last few months, and whenever we get closer and closer to whether it's state or federal elections, tax becomes under the spotlight again. At the moment, though, I think it's because we're approaching the budget time. So everyone's like, maybe we should look at having a budget that doesn't spend so much money or maybe brings in more money. So tax reform has been a big conversation, and particularly because we've had a Senate committee looking into capital gains tax reforms and what they could look like. Now, of course, from our industry over in broking, everyone's obsessed with the cost of housing, what you actually need to get a mortgage, and CGT is a big part of that as well. But Emma, you've been following the committee hearings this week. Give us some of the highlights. What have they been talking about? What have they been looking at specifically? And what are people in the accounting world saying?
Yeah, I mean, there's been a lot of interesting perspectives thrown around this week. So we had, a few economists presenting, and they all sort of had different opinions on the CGT discount, I guess its impact on the tax system and equality, efficiency, those sort of things, and also the housing market. So I guess the key highlights, we had Robert Brunig from the Tax and Transfer Policy Institute, which is like ANU's policy wing, who was basically saying that the CGT discount was not like egregiously high, but it does overcompensate for inflation, which I guess is one of the key reasons that the CGT discount exists in the first place.
Because it's, we should probably say for anyone who doesn't know, it's 50%, right?
Right now it's 50%. And I guess before we get into it, I guess it's good to outline why the CGT discount was put in place in the first place, which was sort of to compensate investors for inflation and make sure they're not taxed on the inflation component of gains, but also to sort of compensate them for the lumpiness of capital gains. So obviously, if you sell your house in 1 year, you're going to be pushed into a really high income tax bracket, and it's sort of a way of compensating investors for that. So it's a simplified system, but I guess that's the intent of it. But yeah, we've sort of got economists saying that it does overcompensate for that inflation component. And we had Diana Hourani, who is an economist with the OECD, who's basically saying that Australia isn't really that unusual in the way that we treat capital gains when compared to other countries, but if we reformed it, it could sort of have these benefits, including raising revenue, enhancing efficiency, and reducing inequality. And the OECD is also seeing other countries sort of interrogating the way they tax capital gains in sort of the broader tax system, not really in relation to housing. Yeah.
I think it's an interesting move because, it does feel high, like a 50% discount on CGT. I get the idea behind it, and I totally agree. You don't want to be stemming too much investor demand for housing. But the argument is, at the moment, do we really want to be encouraging so many people to become investors rather than owner-occupiers? Is this incentivizing people too much and therefore, really causing a sort of lack of supply because all of the houses are being bought by investors. And, you know, especially they're being bought by investors who are benefiting from CGT discounts when they sell them, but also, you know, they have interest-only periods on their loans. Like, there's kind of a lot of like incentives to be a property investor. And at the moment, so much focus is on housing and being like, we haven't got enough housing for our current population, which is ever growing. So should we be looking at changing some of the property dynamics and property taxes to maybe free up some more stock for owner-occupiers? So we've seen a lot on the demand side being brought in from the government with things like the 5% deposit scheme. Anyway, and then they have like Help to Buy, which is just sort of ramping up now.
Yep.
All these different schemes on the boosting demand, but as we said, supply is the issue. So I think lots of focus now has been on, well, how can we actually improve supply, because it takes so long to build a house if you can find a builder. There's some people, though, that are sort of saying, you know what, this is the holy grail. Like, we love it. And I think you wrote a story this week talking about what that argument was. Why is it the holy grail of reform?
So I think that was referring to David Montani, who fronted the Senate committee. He's like a tax specialist with Grant Thornton. He wrote a whole book about, you know, tax reform in Australia and how we're sort of not really seeing a big political push to actually reform Australia's tax system. And I think that comment really referred to, I guess, more broad holistic reform in Australia's tax system. His argument was that basically changing the CGT discount is just like sort of a small fish. It's not a big change in the context of Australia's broader tax system. And, you know, it probably won't raise that much revenue depending on how the government implements it. I think the government's modelling, according to the AFR, you know, allegedly reports from the AFR have said that the government's possibly considering a 33% CGT discount.
That feels better.
Yeah, which sounds like more reasonable. But then you get modelling from, say, the E61 Institute, which found that, you know, say we raised $2 billion a year with the 50% discount, a 33% discount would raise about $2.85 billion. So I guess in the context of the broader tax system, not the biggest change ever, and probably not enough to fund broader tax reform, especially in the context of these, you know, budget challenges we're facing in terms of an aging population and like intergenerational inequality.
So what he's saying is actually the holy grail would be having it alongside other tax reform.
That's the big push, is like his main gripe, I guess, because I also recorded a podcast with him for Accountants Daily not too long ago. But his main, I guess, issue with the tax system is we rely a lot on income tax in Australia.
Yeah.
As our population ages, we're going to be more reliant on a dwindling working population to fund greater, I guess, transfers through the health system for that aging population. And we're seeing that's going to be unsustainable, some people are saying. And what they're wanting to see is more of a shift towards consumption taxes, which is like the GST. Obviously, a bit of a spicy issue because it's a regressive tax. It impacts, you know, low-income people more. But I think there's part of a broader discussion of like, how do we...
into inflation as well.
Yeah, it's like, how do we adjust the tax system so we're not, you know, unfairly penalising low-income earners, but we're also raising enough revenue broadly and not, you know, relying too much on income tax.
Yeah, and I think this is a big problem. You know, we constantly talk about the squeezed middle. You know, everyone who's kind of, you know, a homeowner because they're squeezed every time interest rates go up to tackle inflation. They're the only main people who are sort of targeted. But then also they might be, let's say, 30 to 50s kind of age bracket, probably a homeowner, probably have children, probably have elderly relatives they have to look after. It's the worst decades to be in, really. It's like you've got no fun whatsoever. No. Just look, but every time, we have a tax lever, it seems to be pushing on this 20-year generation, because it's two generations really, because it's sort of saying, well, you know, you're having to pay more because inflation's going high and we're raising the mortgage interest rate. You're having to pay more income tax potentially because you're still working and you're earning the most. And also, we'd like you to pay for all this other stuff when people who are, let's say, boomers and sort of retiring age are probably already quite equity rich.
Yeah. And benefiting from the tax system. And don't have much of a squeeze. They probably don't have a mortgage. So every time mortgage rates go up, they're not really feeling the impact. So we have this kind of lopsided scheme now where you have this middle, which is obviously earning income and rightly so should be taxed on that, but like the elder sort of generation retiring with quite a lot of wealth and not having it that much to do with it, just kind of being like, this is brilliant. And
so
probably
every time
didn't pay much tax earlier on in their lifetime due to some of these investor discounts as
that's
well.
relative though as well, but yes, like, you know, if you think about the Australian sort of in the 70s, very different to Australia now. But I think this is again like why everyone's sort of saying we kind of need to look at reform, because it's just Australia is changing. The demographics are changing.
Yeah.
The wealth transfer is happening. Like, what happens next? And I think this is really interesting when we whenever we look at the results, for example, the lenders, we can see like how old their borrowers are, how ahead they are on repayments, and how many savings they have. And typically we see that the older generation, sort of 55 plus, have huge savings. They typically don't have a mortgage. And, they're having happy days. I wish I was 55 or 65, really. And, it's happy days for them. But I'm generalizing, obviously. But I think just talking about, what we're seeing, the big issue, of course, is really looking at, well, what is happening with house prices? Because at the end of the day, that's what this is about, about encouraging supply. It's about hopefully broadening out like different schemes of different ways of getting income tax and tax revenue, but not sort of, unfairly incentivizing or penalizing any particular cohort. And Charlie, you've been writing quite a bit about house prices this week, as we know, continuing to go up.
Very much so.
What's the sort of headlines that you've been seeing this week?
Yeah, I've the first headline was from earlier in the week. It was an interesting one from Cotality in their February regional market update, which showed that regional dwelling values climbed and outpaced that of the combined capitals. So the regional dwellings values rose by 3.2% to the 3 months to January, and that was compared to 2.1% over the combined capitals. And
of course, from a lower base, so growth can be faster, but that's still really interesting, like seeing that flow, like a lot of demand in the regions.
Especially when you look at how fast some of these cities are growing to, whether it be Perth, Brisbane, Adelaide, that are outstripping Sydney and Melbourne as well.
They're not regional, though.
No. But what I'm talking about is the capitals are growing at quite a fast rate as well. So for the regions to outpace some of those growth seen in some of those hot cities is a pretty interesting stat, I think.
Is there any particular parts of the regions? Like, is it in New South Wales? Is it Victoria? Like
regional Western Australia is kicking the goals here, outperforming all the other kind of regional areas in all the other states at 6.1%. And that's up from 4.9% in the previous quarter. So that's
WA has been the place to be. I think, they're mining boom there at the moment. Like, happy days. If you're a FIFO worker, good for you. Actually, one of our journos recently moved to WA. I think she's gone to Geraldton, has she?
Yeah, she has.
Is that classified as regional?
I think so.
I think so.
It's pretty.
Very
It's like
so.
in the middle, smack bang in the middle, of Western Australia, along the coast.
And I remember when she was moving, she was talking about how expensive rents were.
Yeah.
And she was like, I thought Sydney was bad, but look at this tiny little regional town.
Yeah.
Why is it so expensive?
Yeah.
Because everyone wants to move there, apparently.
Yeah.
But CWA, I think the last 18 months in particular, really increasing. Whether originally it was sort of investors looking over there, and now I think people just moving over there. Plus work is going off really well there too. So WA, the place to be.
Yeah.
But how long for, given rising prices?
Yeah, well, that's the next thing. Let's not forget some of the growth patterns that we've seen this week as well in the cities and the capitals, and especially Brisbane. We got a pretty solid report from Domain, their first home buyer report, and some of the most topical headlines on that were the rises in entry-level dwellings, whether they be units or houses across all the capitals. And Brisbane has really outpaced Melbourne and Sydney by all the other, eastern corridors by a significant margin. Brisbane posting some of the strongest national gains. Entry-level, well, in both categories, entry-level units in Brisbane now sit at $660,000.
Whoa.
Up 24% annually. And you compare that to Sydney and Melbourne. Sydney saw, pretty subdued growth rate in units of 4%, and Melbourne of just 1.3%.
Yeah, no one wants to buy an apartment in Melbourne at the moment. We've got massive oversupply down there.
Yeah, well, that's the thing. You've got
I'd buy one.
Divergence.
Yeah, I'd love to buy an apartment.
Well,
I'll take one.
It's looking pretty endearing at the moment, and that was reflected also in the Cotality report as well, which Sydney and Melbourne were coming a lot lower.
Yeah.
Home prices and unit prices as well. But that kind of goes for houses as well in Brisbane. They're now sitting at entry level. This is entry level prices now sitting at $856,000 after jumping 20.6%. And
in a year.
In a year, yeah.
Wow.
And Perth and Adelaide outstripped Brisbane in the house category, but on a combined basis, Brisbane came out on top.
Yeah.
And Brisbane also has the second longest time for deposit times, or saving for a deposit for your house as well. And that's second only to Sydney. And I spoke to some local brokers in Brisbane to see if the trends that we're seeing in the data were what brokers were seeing on the ground. And the resounding response was yes. I got some great quotes. I spoke to Matt Cunliffe, mortgage broker and Mortgage Choice Brisbane City Group Director, and he basically set the scene of, in Brisbane, demand is picking up and intensifying at the lower end of the market, very much so, and listings are being snapped up very quickly.
And I think we saw this, towards the end of last year. There were lots of reports, both from government but also from sort of property analytics companies like Cotality, for example, saying looking at that lower entry level band, so the cheapest houses basically, the demand for those have obviously gone up so much because house prices are getting more and more expensive. So, and we've got all these incentive schemes encouraging people to buy properties that are in the lower end. So firstly, good luck if you can find one. Secondly, good luck if you can secure it, because everyone is trying to buy it. So yeah, obviously when there's a lack of supply, prices go up because everyone's falling over each other to buy them. So the interesting thing for me is, seeing what's happening to drive this. So we know in WA, there's been a mining boom. There's been loads of infrastructure going in there. Similarly in Brisbane, everyone moved over up to Queensland, I think, during COVID. Everyone. And now it's kind of like Brisbane really taking that focus. People are getting ready for the Olympics in 2032. So there's a lot of infrastructure going on up there. So again, lots of people move to where the money is, where the growth is. Lots of people moving to Brisbane and potentially or apparently buying a unit. Yeah,
very much so. Well, they're proving difficult too. To get the prices that people want, and brokers are now having to be creative and offer some, difficult advice as well of, look, think outside the box. Maybe think of some...
You. They're not allowed to offer advice.
Okay. Well... Yeah, I think what you were saying as well, onto the point of interstate migration, the two brokers that I spoke to were very much... playing into that and stating that, migration from other states is having a massive effect on demand as well for them.
Yeah. We're going to take a quick break here. When we come back, I'd like to talk about some of the other tax reform changes that we're looking at. Payday super coming in soon, and what that means, what brokers are seeing, what borrowers are seeing, what lenders are seeing, and of course, what the accountants are seeing. And we'll get into that just after this. So, Emma... Again, something that both of our titles have been working on and writing stories about the last few weeks has been the changes to Payday Super. So, cliff notes for anyone who's not been paying attention. Now, this is something actually they may not have been paying attention, because there's some data, I think it was this week from Employment Hero, saying that something like 80% of people didn't know what the Payday Super changes were and what they meant for them. So what are they?
So I guess just to give the rundown, Payday Super legislation was passed, I think, in November 2025, and it's basically meaning that from July this year, employees are going to have to pay their employees super at the same time as their salary and wages, instead of mostly on a quarterly basis. And they're going to face penalties if the contributions don't arrive in their employees' super funds within 7 days of payday. So it's quite a narrow timeline. I know a lot of accountants have been worried that say issues in terms of on the super funds end might lead to penalties on the firm, and the ATO is sort of saying they're taking more of a less harsh enforcement approach as everyone adjusts to it. But they've also said, now's the time, guys. It's not July yet. You have time to get your systems in place and really make sure your employees' super contributions are going to make it within that 7-day period.
And of course, if you're a small business, it's probably a little bit easier to make that change. If you're a big business, you could have thousands of employees and suddenly being that is a lot of money to have to pay on payday. That you weren't paying previously. So I think this is why we've been talking about it a lot on The Advisor, is because a lot of brokers and a lot of lenders are saying this is something that we are actually talking to our SME clients about, because half of them don't know about it. And as you said, the Employment Hero data recently saying 80% of normal people normal people being consumers, of consumers not knowing about it. Like, that's actually really terrifying. So brokers have been really proactive, finance brokers have been really proactive talking to SME clients, like being like, do you know about the payday super reforms? Similarly, commercial brokers who may normally specialize in commercial property being like, are you aware? Are you prepared?
Yeah.
Do you need any finance to help?
Yeah.
Charlie, what have you been talking to any lenders around sort of SME finance and what they're seeing? No.
Not really. No.
Actually,
I just feel like throwing to you because I was like, you haven't said anything for a while. So I'm like, do you want to add in anything? Okay.
Yeah, look, it's definitely a theme that's come up in my time here at the Advisor. I know that I sat in on a podcast that you gave with a finance broker, and he was talking about that, you know, it's a massive issue that his clients face is factoring in that cash flow, and now with these changes, it's going to add a added layer of complexity and difficulty there too. So definitely need to build some more awareness about it.
Yeah, he was actually a cash flow broker, so he was like well across it.
Yeah.
Emma, were you going to say something then? Sorry.
Yeah, it's funny because like I guess throwing back to that Employment Hero survey that I covered the other week is they estimated that the average SME would need around $124,000 in additional working capital to sort of manage this transition, which is kind of a lot. If you're an SME. And then almost half, like 40% of them reported that they may need access to credit or financing to support their cash flow. Yeah, that's almost half.
Wow. Well, busy time for brokers then.
Yeah, get on it, guys.
Getting those cash flow loans in. But it is something that, you know, whenever we talk about whenever we're writing about the news or we're seeing something or we're kind of talking about something, I think this is really interesting. Like a lot of the time brokers might be like, why are you talking about tax again? And I'm like, we're talking about tax because it will help you. Like, you know, if it's something like this where it's like, there's a massive opportunity here. People are dying to, you know, find a way of making this manageable if they even know about it at all. The worst thing that you want to happen is to come 1st of July, loads of businesses, particularly medium-sized businesses that will have quite a large bill, will be like, oh my goodness, what is this?
Sprung.
You don't want to get that penalty, you know, you don't want to have ATO chasing you down. No one wants that.
No.
Particularly if you're trying to pay off ATO debt. So I think, having this big change come through is really, really important. Do you, when you sort of are talking to accountants for Accountants Daily and Accounting Times, do you generally see them paying quite a lot of attention to this? Are they focused on this at the moment?
I think it's quite funny because everyone I talk to like knows what payday super is. So like I think a lot of the industry bodies and like the larger firms are aware it's happening, of course, but I'm sure like a lot of smaller firms have no idea that we just don't hear from. And I think that survey found like almost like 1 in 6 business owners don't actually know about payday super. So that's quite like a large sum because these are the people that are going to have to be like adhering to this regulation, right? So I think that's almost like, that's pretty crazy. That's, you know, that's a lot of people.
That's a lot of people. And I think that's it because, you know, if you're a medium-sized business or a large business, you probably have a whole finance team that will be well across this. Yeah. But if you're a sole trader or a small business, you have like, let's say 5 people in your team, suddenly being like, if they're on salary, obviously, being like, oh, I have to pay their super within 7 days or really on payday and make sure it's in their account in 7 days. Like you might not be paying attention to tax reform as much. So this is why we're talking about it. Pay attention, get ready. We're going to sort of talk about, I think, also what we're seeing generally in results season at the moment. We'll take a quick break here, and when we come back, we'll be giving you some of the lowdown, what the lenders are seeing, and what kind of trends we're seeing in lending too. And we'll get into that just after this. So, Charlie, you've been busy again this week doing all of the financial season reporting from the lenders that work in the broker space.
Yep.
I think this week it was mostly non-banks. We had a couple of banks, maybe.
Yeah, we had My State late last week.
Yep,
I didn't get to talk about that on last week's podcast.
Well, now's the opportunity.
I know, yeah. So that's really the only kind of bank that we've had results from in the last week, as opposed to non-lenders. But yeah, I got to speak to their CEO Brett Morgan, and what the bank is seeing is that the home loan portfolio is growing. It's up 12.6 billion on 1H26, which is a moderate increase, 0.4% higher over the period, and the total loan book rose 1.1% to 13.2 billion. And he thinks, and My State thinks, that a key driver of this is new housing activity. So it's going back to the theme of, you know, demand, and people are looking to get in. But also on the broker side, he stressed that broker flows are dominating those distributions.
Yeah,
So,
well, I don't think MyState has really much of a branch network outside of Tasmania. So it's
I
sort
think it was
of
89.
very reliant.
Yeah, very much so. 89%, that's holding steady, while proprietary is 11%. And he basically said that, we're a regional bank and we don't have much of a direct presence. So majority of our presence and writing is through brokers.
Yeah. I remember the first time I went to Tasmania and I saw a MyState branch. And I was like, oh, cool, they do exist. Like, never seen one before. Such a nerd. Anyway, but I think, MyState was also quite interesting because they were also talking about the merger. So they bought Oswide, was it last year, 2024?
I think it was, I think it was early 24.
Yeah, and then
it's been a couple of years now.
Bedding down that and they're sort of slowly moving over to bring that brand into MyState. Do we have any idea of how long that will take?
He didn't have a definitive timeline. He said over the next couple of years, so maybe 2 to 3 years. But yes, on strategy, the bank is going to direct, everything basically into the MyState brand as opposed to and kind of multiple the Oswide brand.
And that kind of makes sense. I think most banks, when they buy a brand, they kind of have that transition period over a few years where they kind of think about how strong is their brand versus ours. Is it worth having two separate things? Like sometimes, obviously it does make sense. If you think about, the CBA Bank West strategy, for example, two quite different strategies. CBA, as we know, really focusing on proprietary, Bank West really focusing on broker. And they both have their own kind of like niches and sort of offerings and very different feel of banks as well. Whereas, for MyState Oswide, they've kind of, I guess, seen how it's been tracking along the last couple of years and now being like, actually, we're going to subsume it into MyState.
And Brett said that as well. He kind of stressed that, look, we've done consultation, we're following our statistics, and, the majority of business is coming through the MyState brand. And that's where the majority of the awareness is. But he told brokers not to worry and that they would be in contact and that it's not going to be anything that's sudden or kind of immediate, and that there would be awareness built about that and consultation with their brokers.
I think it's also really interesting, like having looked at the results this week, and particularly in the non-bank space, but also in some of the banks, is seeing the amount of demand for origination, so new business being written. And we saw this because I think you wrote a story earlier this week about mortgage demand hitting a 5-year high, at least for applications, not necessarily for settlements. Was that Equifax?
That was Equifax. That was Equifax.
So 5-year high, so 2021.
2021. So that was from...
So during the COVID boom, when we obviously had record lending going on when interest rates were super low. Yeah, but the credit bureau is, borrowers are moving decisively in the final months to 25 to secure loans before rates climbed higher. That was the message, the underarching message of that report. And we've got some broken down stats of age groups and categories as well, which is always interesting. And Gen X borrowers are recording the strongest mortgage demand growth at 13.6% year on year. What age is Gen X?
So that's 46 to 55 years old. And also
the squeeze middle.
Exactly. Going back to that point. And also upgraders, which is, they say, is households increasing their mortgage to trade up or fund major renovations, are also leading purchase activity with a 16% annual rise.
Yeah, upgraders is really interesting to me because I feel like a lot of people, have been sort of saying, a lot of brokers have been saying they're seeing a huge amount of demand from upgraders. And I'm a bit like, where are they finding these properties? Like, there's supposedly a lack of supply. And they're like, just moving into a bigger house. Yeah. Maybe that's it. Maybe the problem is there's not enough people moving out of smaller houses to bigger houses and freeing up this kind of not lower end, but like stock that's more accessible. Yeah. So, we want to be able to have people moving from house to house, whether it's upsizing or downsizing, so making the kind of the movement more easy. And we know that from brokers as well. We've been seeing a huge amount of demand for bridging finance as people move house at the moment too. But just going back to like origination demand, so Liberty Financial also released their results this week and they said, their loan book has actually remained relatively stable. So they've had quite high discharge rate. So lots of people leaving the lender to go to some of the other banks. And I spoke to the CEO, James Boyle, who was saying, actually what's happening is that because they're being lured away by competitors. And he was quite punchy in his comments. And I'm just going to read his comments. He said, the banks are competing fiercely. They're definitely lowering standards in order to try and drive better market share. What that means is there are pretty good alternatives for customers to go to banks pretty quickly after they've joined us. That's the rear guard that we continue to try to manage as best we can. I thought was interesting. He's saying they're lowering standards. I'm like, credit standards? Like, that's not good if that's true.
No, it's not.
Back
It's
to 2008. Let's go.
No, let's not go.
opposite of what they should be doing.
But
the
so,
exact
but
opposite
like,
of what they
I
say
don't know
they're
how
doing.
much of that he means is just like, well, they must be doing something. But like, they're definitely we've seen the pricing at banks particularly drop quite substantially. Maybe short-lived because obviously the February rate rise means that things will be going back up again. But we have seen a lot of competition. But I thought that was really interesting because particularly originations were huge for Liberty. So they're seeing a lot of new business coming in, but they're also seeing a lot of old business going out. So generally their book remained flat at about 15 billion. But again, like sort of seeing this is for the half year ending 2025. Sorry, I'm not sure if I said that already. So they saw originations increase to 1.85 billion in the half. And generally, again, seeing quite a lot of activity in sort of all categories, in particular, a lot of activity for small to medium-sized businesses, for self-managed super fund lending.
Yeah.
I think Liberty was one of the first sort of non-banks to really come out with the SMSF, if not the first. And I think actually that side of their business, the secured business arm, reached a milestone $1 billion in the half. They've never done that before.
Wow.
So seeing that secured business portfolio, which includes business loans,
Yep.
really growing quickly.
Yep.
And they also announced that they'd secured business lender Moolah.
Oh, nice. So that could just,
so now they've
continue
got-
to expand
Exactly.
in that category.
So now they're like, well, I think they already had a small stake in Moolah, and I think they also have a stake in Moneyplace as well. And they were like, well, we bought a 50% stake, a majority stake. So that means they can kind of really start adding in what they're doing. And the idea, I think, is that Moolah will start offering secured loans because they currently only do unsecured loans.
Yep.
And vice versa, Liberty Financial will be able to start offering more unsecured loans through Moolah as well. So kind of having that diversification of strategy. So that was Liberty. And I think that trend, though, of seeing generally lots of demand over November, December, January has been the common trend in results so far. Most of the results we're reporting are for the period ending December.
Yep.
So, yeah, lots of business coming down that way. How
Yeah.
long that will last, though, of course, because we had the February rate hike.
Yep. And
We'll have to wait
a
and
lot
see.
of the lenders are saying that in their reports as well, and in those projecting to the future of, well, let's factor in that rate rise for our expectations for growth as well. But yeah, originations are up at Resimac as well. We got Resimac's first half financial year 26 results yesterday.
Yeah.
The day before yesterday, I reported on it yesterday, and origination volumes rose 11% in the half to 3.1 billion, which
Massive.
they said showed stronger conversion from applications into funded loans. And application volumes are also up, and group assets under management are also up as well, and home loan settlements are also up.
Yeah. Which I think it's always interesting when we talk about originations. We have to be like, yeah, it originated, but did it settle?
Exactly. Yeah.
So we have to talk about settlements too.
second
And the
stat.
other lender that I remember reading, which I was quite surprised about, was BNK, who
Yes.
had seen their book go backwards. But they
Yes.
said it was on purpose. We did that on purpose.
There was a lot of disclaimers with that headline of BNK's book shrinking, and BNK's obviously the group is the non-bank lender behind Better Choice brand as well. But yeah, they reported that their loan book had shrunk, but they said this and they reiterated this reflected ongoing runoffs in lower margin loans and a conscious, deliberate kind of focus on reshaping the book into
High margin lending.
high margin lending. Yeah, high margin lending.
So they say.
So they say.
I mean, when your book shrinks, you've got to find a reason for it.
Yep.
Supposedly, I mean, I'm being tongue in cheek here. They did actually say a couple of years ago, I think maybe last year, they were like, we're going to be focusing on some of the higher margin lending,
Yeah.
so pulling
Commercial
back from some
portfolio.
of the kind of more vanilla type stuff, which they don't necessarily want to be playing in because
Yeah.
there's a huge amount of competition, as we
Yeah.
heard from Liberty. So I think that like, what else can we be doing? And because of that, they're seeing quite a bit of runoff, high discharges and low originations, but still good business coming through the doors and still working closely with the broker channel.
Yeah, that's what they say too, not to discount the commercial category, and that it's adding to their kind of profit base as well, and earnings base. And,
Yep.
you know, while those the book may have shrunk, their profits are up, so they don't seem to phased about
Not
it.
too phased. Emma, over in accounting land, what are your kind of things that you've got coming up next week? Any big exciting moves, announcements, anything happening in the accounting space that you think you'll be talking about a lot?
I think the biggest one we're going to see is it's sort of probably not relevant for your audience so much, but it's the tax ombudsman's handing down her report into sort of the ATO's interest remission approach. So yeah, we'll be covering that. That's been pretty spicy in the accounting world lately. There's a lot of tax agents who aren't very happy with the ATO's approach to interest remission, and they're saying there's a lot of inconsistency there.
Is this for ATO debt?
Yeah, so this is ATO debt. So
Yeah.
basically, like when you're getting like additional penalty charges and you're trying to get a remission because your client's in hosptal or there's something else going on, the ATO has taken a very inconsistent
Hard line.
approach to that.
Oh, inconsistent one. Okay.
Yeah, it's just like there are these things where tax agents are calling the ATO 4 different times until like shopping around till they get someone who's going to give them the answer that they want,
So
which is
bad.
obviously not what we want. Obviously, the ATO's done a little bit to fix that now because it's been quite publicized. So they're moving it to a centralized online location instead.
Oh,
but
no.
yeah, it's
Okay.
been very interesting for us. Obviously, tax reform is like a huge ongoing conversation, especially in the lead up to the budget. And yeah, other than that, it's probably going to be little things that pop up throughout the week.
Yeah, I feel like a lot of the kind of times that I'm turning to Accounting Times or Accountants Daily is for the tax reform stuff, but also for like crazy tax fraud stories. And you had one this week where I was a bit like, sorry, what? And about a Ferrari?
That was pretty crazy. Yeah, we always do some interesting, I think, yeah, we do a lot of tax evasion, tax fraud, that kind of cases. The other week I reported on this accounting firm, which was based in Perth. And this director, who's an accountant, so he should know better, but he basically bought a Ferrari through his firm and he was trying to argue that it was for work purposes. He was like, oh, I only like do use it to like drive between my work offices, and like he parked it at home. And then slowly as the court's like questioning him, he starts admitting up. He was like, I also drive my girlfriend down to Margaret River for weekend trips to check on my investment properties, which doesn't even have anything to do with his business. So I don't know why he was trying
Unless
to
he's
argue
a property
that.
manager as well
He's
or
an
something.
accountant.
Yeah.
And he's like, and then we just like happened to go to wineries for lunch and like
I love that it's a Ferrari.
It's
I
so-
mean, if it was any other car, it'd be fine. But because it's a Ferrari, you're like, that's
It's
a
like-
bougie car to choose.
do you guys want to guess how much it cost? It was secondhand Ferrari.
How much would a second hand?
Well, how old was the car?
Yeah, exactly.
I
I
have
was gonna
no
say, what
idea,
year?
yeah.
$350,000.
Spot on. Yes.
Wow.
Yeah.
What a guess.
Yeah. Yeah.
Pretty
So
hefty
it was
price tag
a
for a
lot of money.
second-hand car.
And
Gosh.
I think the funniest part of that case for me personally was they got this expert in from the US to sort of argue that a Ferrari wasn't a passenger car, and he was sort of, and I quote, he was like, it was born to race. Like that was his argument, that it shouldn't be subject to fringe benefits tax, which is what the whole case was centered around, like fringe benefits tax.
FBTs, yeah.
And yeah, he was like, it can't be like a passenger vehicle. But then the tribunal is bringing up all this evidence from the Ferrari marketing material saying it's advertised for convent. And then
Oh,
they'll ask him, so when you and your girlfriend went to the Margaret River, like, did you...
Was it comfortable?
Yeah, was it comfortable? You're clearly carrying a passenger. Anyway, I thought that was such a funny argument in the case.
Isn't it
And-
strange that they would ask someone from America to pitch in?
Yeah,
Why
I
did
don't
they
know
not
why.
find a specialist in Australia?
He was like a
Because
car
it doesn't
expert.
pass the pub test.
Yeah.
That's why.
That might be
Yeah.
why. And apparently, I think it was also funny because the court was noting that the witness was quite combative and was sort of strayed into advocating for the client, which I thought was quite funny.
Was he
Ascribed-
meant to be on the client side?
No, he's
Oh,
just
he's
an
meant to be
expert
on-
witness. He's supposed to be
okay.
impartial, but he was sort
But
of
who
like.
called the witness? Like the
I
the defense?
I have no idea. I probably should have looked into that.
Because
But
he was driving
Because
a
it depends
Ferrari.
on who's called the
You're my guy.
witness. If it's the people, the lawyers representing the client who's backing it, then I would understand.
I
That
think
he
he was just
would
like
be,
some Ferrari expert. I think that's what his purpose was in the
Oh,
case.
God.
Yeah, wow. Well,
Interesting
there we go.
stuff going on.
I now know probably shouldn't buy a Ferrari for business purposes.
Maybe we'll do that. Yeah.
I mean, I can barely drive as
That
it
was
is,
on
so
number one on the
I wasn't
list as
going
well,
to anyway.
so-
I'm a very nervous
Emma.
driver. Anyway, we've talked quite a bit here about some of the things we've been writing about, and thank you, Emma, for joining us and talking about what you've been seeing in tax reform and how that kind of plays into what we're seeing here in the broking space as well. And speaking about broking, we're just about to start our Better Business Summit and Better Business Awards tour, which we're super excited about. We've got so many amazing speakers this year. We're really focused on scaling brokerages. To be honest, actually, it could be scaling an accounting firm as well. Better Business is pretty much what it says on the tin. It's about business operations. So it kind of goes across any industry. We've got some brilliant speakers. We've got Drew Arthurson, who's the Chief Operation Officer of the Sydney Swans, talking about how you can perform and run a sort of elite team as COO of the Swans. We're kind of picking his brain about top tips for running an efficient business. We're talking to Maxine Horner, who you spoke to this week, Charlie. She's from Vita Group and Shark Tank.
Yep.
She's talked to loads of businesses and her past as a Shark Tank judge, but also
an entrepreneur,
as an entrepreneur, and very successful one.
Building scale very much so, starting from nothing and becoming an ASX listed company.
Yeah.
She's got all the tips.
She's got all of the experience. So really looking forward to hearing from her as well about what she's seen on and done on running a successful business.
Yep.
We're hearing from brokerages themselves. So Darren Little, the managing director of the Smart Move brokerage, which has over 100 brokers, one of the top 25 brokerages in the country. He's talking about how they've scaled. We've got, I think when we're in Sydney, we've got an F1 former head of operations. I've forgotten his name. We've got a former head of operations from an F1 Red Bull team talking about how they really kind of, ran a schmick team and one that could drive to survive. And as well as all that, of course, loads of amazing partners and supporters coming along on the roadshow to provide brokers with the best tools, the best tech, the best advice on running a successful business. So if you haven't already bought your ticket for the Better Business Summit, make sure you do. And of course, for the Better Business Awards, we announced the finalists this week. Finally announced the finalists. Thank you. More than 800 brokers across the 5 states in the running for an award this year. I think it's one of our highest ever finalist categories. We had pretty much packed out categories for every single award. So thank you so much to everyone who took the time to submit. And thank you also for your patience for all of the verifications that we went through this year. It was a whole new way of doing it. It took a little bit of time and a lot of questions. So thank you for playing with us as we and taking your patience with us as we went through the verification checks. Really appreciate that. But yeah, congratulations to all 800 finalists. And if you haven't already checked out the list, it's on betterbusinessawards.com.au. And then we hopefully will see you at the Better Business Summit and Better Business Awards. I should say, if you are a finalist this year and you've bought a ticket to the Better Business Summit, you can come along to a special new social media event in the morning of the Better Business Summit where we're giving all the finalists who register a trophy. We're doing social media. There'll be a DJ. It's going to be bright lights. We'll get you in the mood. You can get a photo with your trophy, post it on socials, Get ready, go to the summit, learn all about scaling your brokerage, and then celebrate in the evening at the Better Business Awards. It'll be fantastic. So if you haven't already...
awesome. I want to come.
Yeah, you should. Come along. If you haven't already bought your ticket, and Emma, this is the link for you, betterbusinesssummit.com.au. You can also then register for the breakfast. If you're a finalist and you haven't done that yet, then you can reach out to me, editor at theadvisor.com.au, to find out how. But I'll just quickly run through the dates. The 12th of March, we're at the Sofitel Brisbane. The 19th of March, we're in Adelaide Convention Centre. The 26th of March, we're at Crown Perth. We've got a little break then for Easter. The 9th of April, we're at the Hyatt Regency Sydney. And then we're finishing off in Melbourne, which is NAB's home state because they're our principal partner, on the 16th of April. So that's every Thursday pretty much, apart from the week in between for Easter. So yeah, hopefully we'll see everyone there.
Hopefully.
Very
Charlie,
exciting.
Emma, thank you so much for joining us today.
Thank you.
Thanks for having me.
And thank you all for tuning in. We hope you have a fab weekend, and we'll catch you next week for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.